Good afternoon. This is Tom Aspray with the Viper Report. It's Wednesday, May 5th, starting a new month, and the music is playing again today after yesterday's sharp market decline, and clearly global stocks have continued to move higher. Yesterday's sharp decline was tied to comments by now Treasury Secretary Janet Yellen that rates may have to go up at some point. That really spooked the market. But frankly, that decline was forecasted by the action last week. This is a chart of the QQQ, the Nasdaq 100, high-end tech, biotech, etc. I talked about it in the last weekend's Forbes article, and particularly the reaction in the market last week to the earnings by Microsoft and Apple was quite bearish, in my opinion. The markets really didn't respond well to earnings that were well above anyone's wildest expectations. Didn't even like Amazon's earnings, and so this arrow right here marks Thursday's action. Things started to top out. This is the Nasdaq 100 advanced decline line, dropped back below its moving average on Friday. The OBV tried to get back above its moving average. It failed. Those of you who've seen my presentations on OBV or been in some of my classes, this is a pretty bearish setup. So really was not surprising that we got hit hard on Tuesday. You can see we did drop below the Stark bands. Those of you familiar with the Stark bands, you will understand that when it gets down there, it's a high-risk time to be selling and a low-risk time to be buying. So today's rally on Wednesday was not really that surprising. Those who sold short late probably are feeling some pain, and the rebound certainly could last longer than today. In last weekend's article for Forbes, I really stressed that you should not react emotionally to good earnings reports. It's usually a mistake. And last week, heading into those earnings, both Apple and Microsoft were extended technically above their Stark bands, reaching pivot resistance, etc. And of course, that was also the case in January. That's when Apple made a high of 144. It's not been above that since, so it's been drifting lower. And there's a good chart in the Forbes article that shows you that deterioration. And while the advanced decline line on the Nasdaq 100 is negative, that's not the case for the S&P or the NYSE stocks only AD lines. Both have recently made new highs, are in solid uptrends and above their support. So at this stage, they don't show any signs of a top. There are some measures of the market that got pretty risky last week, but yesterday's decline, Tuesday, helped relieve some of that risk. While the markets had a fair amount of risk, there's some really good trading opportunities in both stocks and ETFs. AllianceBernstein was a stock we bought back in the middle of April. You can see it completed this flag formation. Those of you who attended my Wealth 365 presentation, this is a continuation pattern, and we discussed in that presentation you could measure targets to the upside. We were fortunate enough to get long right around 40.08. You can see we came down into the monthly pivot and then held. RS, that measures how the AB was doing versus the S&P, was positive. OBV was positive. And just this week we had an order in to sell at 44.24, I think. We got well above that level. So we took half the position off for about a 10% profit. We're letting the other half ride. We will be watching the daily action closely to see if the indicators weaken, and if so, we'll just sell out the other position. Otherwise, we'll just continue to use a trailing stop. A position we just got in this week is Devon Energy. You can see it also completed a continuation pattern. You remember that these kind of patterns, people were pretty bullish on the stock right around in here, peaked right here just below the monthly R2 resistance, hit the upper Stark bands, and we had like almost a 2-month pullback here. The bulls left the field at that point, and then last week we broke out of that flag formation. That was confirmed by the technical studies. We had a huge day up at the end of last week, hit a high at 24.85. I think that was last Thursday, then started to pull back. So we put an order in recommending to buy Devon at 23.04. We got lucky on this one because we got down to 23.02 on Tuesdays, market weakness, and are now up sharply. Stock is up 7.6% just today. Of course, I follow the growth versus value debate here, and I've been saying that I thought this rebound in growth, you remember growth got hammered into March, it rebounded, so when this is falling, growth is weaker and value is stronger. So this is the rebound in growth, appears to be over. We've broken this support. So longer term, it looks like value is the play, and we really got to take out this low from early March to confirm that negative view. But we're watching it. We update subscribers on a regular basis on this chart. Of course, this is one of the charts I provide my students in my mentoring program. I can send them the charts so they have my setups and they don't have to spend the extra time recreating their own. Our view towards the value play is confirmed by the action in XOP, the S&P, or the Spider Oil and Gas ETF. Also similar formation, broke a nice downtrend here. We popped up to the upside. I don't like to chase prices, so right up in here was pretty risky. So we put in an order at 80.67, and we had a second order to buy down here. We didn't get that one, but we are in that initial position. It's also having a good day on Wednesday, up about 2.9%. You can see the S&P intraday hit a low just about after 10 a.m. and has been rebounding here. Market internals are slightly positive, not great. 1886 up, 1425 down. So like to see a much stronger numbers to boost the market even further going to the end of the week. Of course, we do have the jobs report, so that's always fun. ADP report was not as positive as many were expecting earlier today. But lately the ADP unemployment report has not tracked very well with the monthly jobs report. So not too worried about that. The rest of the economic data has been very strong. I've been featuring some economic charts in my reports in both the Viper Hot Stocks and the Viper ETF report, because I think it's really important that people understand some of the economic measures, and it allows you to follow along with them as well. And of course, you can find a lot of my articles on the viperreport.com. This was from a couple weeks ago. Everyone seemed to cool on inflationary fears. I don't think they're over yet. So I'm watching interest rates. Interest rates get much above 1.7% on the 10-year yield. That's probably going to spur some selling. And I think, rates could easily hit 2% there. So we've had a great couple of months. And if you're interested in specific buy and sell advice like we just discussed, you can go to the Viper report, click on the Viper ETF or the Hot Stocks report. I don't think it's going to be an easy year as it was in the past year. I think it's going to be choppier, just like yesterday. We were lucky to get our orders filled, but I think you have to be a little nimbler. And if you would like to learn more about the markets, I try to do that in both publications. So I hope you follow me on Twitter, because I send interim updates out during the day. So hope you have a good Cinco de Mayo and enjoy celebrating it, as will I. Take care.